Good afternoon, class. Today I'm going to go over some problems from Chapter 1 entitled The Individual Income Tax Return. I'm going to start with problem 2. And the problem reads, Jason and Mary are married taxpayers in 2019. They are both under the age of 65 and in good health. For 2019, they have a total of $41,000 in wages and $700 in interest income. Jason and Mary's deductions for adjusted gross income amount to $5,000 and their itemized deductions equal $18,700. They have two children, ages 32 and 28, that are married and provide support for themselves. What is the amount of Jason and Mary's adjusted gross income? What is the amount of their itemized deductions or standard deduction? What is their taxable income? And so to the right here, I provided the tax formula and the filing status and standard deduction schedule. These will both be useful tools in trying to compute problems like this. And so first, what we want to do is go back to our narrative and identify our data. And so we know the tax year is 2019. They're under age 65. They have $41,000 in wages, $700 in interest income. Their deductions for their AGI amount to $5,000, and their itemized deductions are $18,700. So in answering the first problem, what is the amount of Jason and Mary's adjusted gross income? The formula to compute that would be gross. Look to the right, it'd be gross income minus deductions for adjusted gross income gives you your adjusted gross income. And so in this situation, 41,000 is the amount for the wages plus 700 in interest less 5,000 in deductions would give you 36,700 as their AGI, adjusted gross income. Now, what is the amount of their itemized deductions or standard deduction? And so in the narrative, they let us know they had 18,700 in itemized deductions. And according to the table to the right, they're entitled to 24,400 in the standard deduction. And so, of course, you would choose the largest of the two. That's your option under the tax code. And so that means their standard deduction is 24,400. So next, what is their taxable income? To compute the taxable income, if you look to the right, you follow down after you obtain the adjusted gross income, then you less the greater of the itemized or standard deduction, and qualified business income deduction, and then that gives you the taxable income. And so here, that means their AGI is 36,700, previously computed at top. So that 36,700 less their standard deduction of 24,400 would give you their taxable income of 12,300. So next we have problem number 3. It states Leslie is a single taxpayer who is under 65 and in good health for 2019. She has a salary of $24,000 and itemized deductions of $1,000. Leslie allows her mother to live with her during the winter months, 3 to 4 months per year, but her mother provides all of her own support otherwise. So how much is Leslie's adjusted gross income? What amount of itemized or standard deductions should she claim? And what is the amount of Leslie's taxable income? If we look to the schedule to the right, her gross income would be $24,000. Because they state no other income. So $24,000 would be her adjusted gross income. The next question asks, what amount of itemized or standard deduction should she claim? They detailed $1,000 in itemized deductions. And since she's a single taxpayer who's under 65, according to the schedule to the right, she's entitled to $12,200. And so we would choose the greater of the two. And so that means her standard deduction is $12,200. The last question asks, what is the amount of Leslie's taxable income? And remember, you'll take the AGI minus any deductions. And so our AGI is 24,000. It's going to be less the 12,200 of her standard deduction, which is going to give her taxable income of 11,800. Next, we have problem 4. So problem 4 reads, Lou has a salary of $53,000 from her job. She also has interest income of $1,600 and dividend income of $400. Lou is single and has no dependents. During the year, Lou sold silver coins as an investment for a $7,000 loss. Note, if an individual taxpayer ends with a net capital loss, short-term or long-term, up to $3,000 per year can be deducted against ordinary income. So calculate the following amounts for Lou: her adjusted gross income, her standard deduction, and taxable income. And so I added that note in order to help you with this type of problem. And so her adjusted. So first we'll go back to the problem and we'll identify the amounts. And so Lou has a salary of $53,300, interest income of $1,600, dividend income of $400, investment for a $7,000 loss, and remember $3,000 is ceiling. And so now her adjusted gross income, her salary was $53,300 plus interest income of $1,600 plus dividend income of $400. And that's going to be less her loss of $3,000. And so our AGI will be $52,300. Again, wages, interest, her dividend, and the loss ceiling. Next, they ask for the standard deduction. And so looking back at the problem, I don't see an itemized deduction. And so her standard, based on the fact that she's single, will be $12,200 from the table to the right. So next, computing the taxable income. And so again, we'll take the AGI, which is $52,300, less the standard or the itemized deduction. In this case, it's the standard deduction. And that would give us $40,100. Problem 5. Diego, age 28, married Dolores, age 27 in 2019. Their salaries for the year amounted to $47,230. They had interest income of $3,500. Diego and Dolores' deductions for adjusted gross income amounted to $2,000. Their itemized deductions were $16,000, and they have no dependents. What is the amount of the adjusted gross income? What is the amount of the itemized deductions or standard deduction? And what is their taxable income? And so the data in the problem: salaries of $47,230, interest income of $3,500, and adjusted gross income amount of $2,000. The itemized deductions were $16,000. They have no dependents. So when calculating the AGI, adjusted gross income, we're going to take the $47,230 plus the $3,500 in interest income. So that would give us a total of 48,730 for their AGI, adjusted gross income. And so again, that's the wages and interest. Next, what is the amount of their itemized deduction or standard deduction? And so in the narrative, they note that their itemized deductions are 16,000. And according to the table to the right, for them being married, I'll scroll up. Married filing jointly is 24,400. So 24,400. And so of course you're going to choose the greater of the two, which will be the 24,400 in this narrative. So now we're going to compute what is their taxable income. And so that's AGI minus a deduction will give you the taxable income. And so our previously computed AGI is 48,730 less the standard deduction of 24,400, which will give them taxable income of 24,330. And so again, these are all different scenarios. We've computed the same type of information for each one, and all of the information can be computed by following the steps in the tax formula and pulling data from the from the filing status and standard deduction schedule. Thank you.